yourself, for your children, for yourself and spouse, and for parents, then you can claim. Need not be on a single policy. Need not be on a single. Yeah. That will be 35,000. 15,000 for yourself and your spouse, 20,000 for your parents. Correct. Up this 35,000 is the maximum. Actual premium paid subject to these limits. The deduction is actual premium. This is a deduction for payment, actually payment made. Yeah. Then there are deductions for donations. There are three categories. There is a 50% category, there is a 100% category. Then there are certain donations which are subject to limits. The limit in general is 10% of your gross income. Okay? You cannot donate more than 10% of your gross income, and the deduction is 50% of the eligible amount. But there are certain categories like Prime Minister's National Relief Fund, or Chief Minister's Relief Fund, or any Governor's Fund, or National Calamity Fund. There is no limit, and the deduction is 100%. So there are certain categories. There are also certain institutions which are eligible to give you 100% deduction. They are basically scientific research institutions or hospitals which carry on research and also carry out public welfare projects. They get special approval and they are eligible to offer you deduction of 100% under section 80 GGA. So these are the deductions for donations. Then there are not very commonly used for medical expenses for specific ailments, for maintenance of handicapped dependents, and then person being handicapped also has certain deductions. For those who don't have any house but they still pay rent, there is a deduction available for that. All of you will be interested, there is a new section from last year, that is financial year 13-14 onwards, under section 80 TTA, which is the interest on savings accounts up to 10,000 rupees. Okay? This is one aspect which many forget to even mention in the tax returns. Everybody talks of only Form 16, whatever is there in Form 16 that gets filed, any interest on housing loan is filed, but interest on our savings account is not taken at all. So possibly this has been brought for all of us to keep remembering that there is something called an interest on savings account. So up to 10,000 is tax free, beyond that it is taxable. You will have to declare, when you file your return, you are going to declare whether it is from savings account or from a fixed deposit. If it is picked for scrutiny, you will have to prove that. Yeah, you will have to prove by a bank statement. Filing of tax returns, please do file tax returns on time. Certain losses are not allowed to be carried forward beyond the limits, including capital losses. If you don't file within the due dates, you cannot carry forward the loss on capital. Any short-term, long-term capital losses that you have, you cannot carry forward if you don't file within the due date. So one other tip that we can look at is there is a form number 26 AS, all of you must be aware, which is now available for you to download online. Compare the tax deductions that are mentioned in 26 AS with your calculations, including your Form 16 or 16A for any interest or any other income that you have. Compare that, ensure they are tallying with each other. If it is tallied, the probability of getting a scrutiny is eliminated. Okay. Also be wary of what's called an annual information return. Suppose all of you are aware, there are 8-9 categories of reports the government receives, the tax department receives from various agencies, what are called annual information reports. Property bought 30 lakhs or above, property sold 30 lakhs or above, investment in bonds 5 lakhs or more, investment in equity shares 1 lakh or more, credit card spent more than 2 lakhs per annum, then physical cash deposit of 10 lakhs or more in a single account. So these reports are sent by the agencies to the central government. They in turn cross-verify with your return whether your profile matches with what is mentioned in the annual information return. These are all trigger points to get a scrutiny notice. As long as you satisfy I forgot to include that mutual fund investments 2 lakhs or more are also included in the annual information report. So, if your income tax return supports the investments which are listed in annual information report, then you may not get a scrutiny notice. But if there is a mismatch and if there are trigger points which the tax department notices, then they will obviously send you a notice that starts the battle with them.
What I have seen in AR is the sell portion is getting, I mean, buy portion is getting, means the buy mutual fund more than that.
Yeah.
If I'm switching, for example, selling and then buying back. So sometimes it shows up as skewed that, I bought so much, but it's not true, right? I mean,
They only look at the sell, they don't look at the switch or buy. I mean, they don't look at the sell even. Only when you are buying units, that is what is reported. So a switch is also a sale from one scheme to a buy into another scheme. So that sale is not reported. AR is part of your 26 AS.
what I'm saying is, sell is not reported. It appears that I am buying from nowhere. That's what I mean.
Yeah. See, when you are buying, you have obviously sold something. So the tax department will look at whether you have declared the capital gains on those.
That's what it's not much.
Okay. If you have reported many transactions under sale and reported the capital gains, then you are off.
Right.
They match with that. If there are no sale at all, and then there are only investments, then it's a trigger point for them to send you a notice.
They could have, that's what captured the sell so they can match it. They don't have to do any match.
Yeah. Thank you. You are giving them some ideas.
See, the 2 lakhs only depends because there are a lot of queries regarding this. There are people making 50,000 for 4 months becomes 2 lakhs. One. Second thing is that 2 lakhs at the various point of time. I understand this month 2 lakhs, after 2 months 2 lakhs.
It is single transaction. 2 lakhs or more on a single transaction. That is what, see, the annual information report says only this. Any transaction of mutual funds, 2 lakhs or more on a single application. That is what should get reflected. See, the mutual funds, how they interpret, I don't know. The law is very clear. They are talking of a single application.
Yeah, I think, like if you suppose you want to invest 3 lakhs in a mutual fund and do it at 1.5 in one transaction after 2 days, you do it at another 1.5, it's not very good.
It will not come. It should not come. That's the way the act is. You can beat the act many ways. See, there are acts and there are loopholes. Oh, you're testing my memory. Okay, we'll look at this. We'll start from cash. 10 lakhs or more physical cash, not checks. Physical cash 10 lakhs or more deposited into a single account in one financial year, aggregate value. Then in one account, yeah. Physical cash. It doesn't come under AIR. You are asking question on annual information return. It doesn't come under AIR.
Sir, I will give this number.
Don't worry. I will not send you a bill. Don't worry. You want? Can I finish this? So cash, then mutual funds 2 lakhs or more in a year, single transaction. Equity shares 1 lakh or more, single transaction. Bonds, that is RBI bond or debentures or any such bond, 5 lakhs or more in a single transaction. Property 30 lakhs or more, buy. Property 30 lakhs or more, sell. Yeah. Credit card to spent on a single credit card 2 lakh or more in a total in one financial year. Does it come to 8? 6, huh? There are 8, so I missed 2 more. I'll come back to you. No, this sale is separate, buy is separate, 30 lakhs. So I've given you 7. I have to give you 1 more. We'll come to that. Yeah. Yeah. Yeah, 15H has no limit, that they don't specify any limit. 15H is merely a declaration which says that your total income including this interest is less than the limit, taxable limit. So you are asking the bank not to deduct.
My question is, suppose I know it's beyond the taxable limit,
Hmm.
but this 1.5 lakh must be a pretty
It's a technical violation. If you give a declaration because you know you will not pay tax, but you are exceeding the limit, you are managing your tax through some tax planning. Strictly it is not covered, you are not supposed to give.
But then the other way is to get the refund from the
Yeah, that's what the government wants you to do. The government wants you to suffer TDS and then file a return. See, if you still give, it's a technical violation. If they find out, there could be some penalties on that. I am done. This is my last slide.
So that will be captured in Form 26A.
Yes, it will be.
Automatically it will be
Yes,
captured.
it will be.
But you said
Real estate, buy and sell 30 lakhs of.
Correct, but I did some transaction like that last year, but I thought it's not be anywhere.
Thank God for it.
Should this inherited income be declared in the tax return?
No, declare the value only
No,
on the same
who
deed.
files a AAR for real estate? I mean, I know mutual fund, AMC files. AAR, who files?
The registering authority, that
Oh.
is the
The
register of
government.
office.
No wonder it doesn't help.
I can't say that.
Inherited income.
Inherited is not income, inherited is an asset.
Okay, that need not be declared.
That is an inheritance. Inheritance is tax free. But any income earned on that inheritance is taxable.
Correct. So this inheritance per se, we did not declare.
Correct. It's only an income tax return. It is not a statement of your receipts and payments. It is merely an income tax return. Yes.
Sir, can you please explain us like the pros and cons of a Hindu-related family?
Hindu undivided family is a separate 45-minute session. Please. It's very difficult. To put it very simply, you must have a nucleus of a grandparent. Okay. The asset to start a HUF should be from the grandparent. And whatever nature of asset he gave you should be existing in the same form. If it was cash, must keep the same note. That's what the act says. Okay? The character and the nature of asset should not have changed to form a HUF. So that's a starting point. I'm giving you only one point. Yeah. Anything else, please?
So the AAR gold is purchase of gold is
This housing you said, right, the deduction. So if we take from non-bank or non-HFC, like from friend or personal loan for the purpose of construction, is that considered that interest?
Yes, it is considered.
But it has to be proved. Like, it is
Yeah. You will have to take a PAN number of the person to whom you are paying. Okay? The tax department has a right to send a notice to that person to know whether he has included as his income. And if he says he has not received, you are in trouble, not he.
Personal loan, like from bank, personal loan.
Personal loan you cannot do because how do you prove that it is for the house? See, there are people who are claiming. In fact, they come and argue with me. When I file tax returns for clients, they tell me, sir, I am telling you, this is for house, please claim. I'll claim. I am not filing I am not signing the return. He is signing the return. I am only helping him to file. So, if you are signing the return, you claim.
But in the case of scrutiny, it will be discouraged.
Scrutiny, see, they only look at whether the end use of fund has been towards the construction of the house. It's an interpretation question. The Act does not very specifically say it should be taken only from a recognized institution. There is nothing in that. Only in respect of 80C, deduction under section 80C, they are talking of national institution approved by National Housing Bank, all that they say. For interest, it's very open. So it's up to you to take interpretation. Last question.
So that was a section mentioned, deductions of rent.
Yeah.
So what is the limit?
2000. See, the actual deduction is 2000 or rent paid, whichever is lower. The conditions are you should not be owning any house, you should have paid rent, and any of your parent, spouse should not be owning a house anywhere in the world. Yeah? Yeah, last question. Srini, one more question.
Absolute the last.
There's a 2,000 rupees marginal relief up to which from
878. Yeah, it is there.